Well, Brigade Enterprises, the next management on the show. The stock has surged 47% in 2024 so far. The company recently raised 1,500 crore rupees by selling equity to institutional investors as part of the strategy to expand their business. To discuss this and more, how demand trends as well, we're joined by Pavitra Shankar, the MD of the company. Hi, Pavitra. Good morning. Always good to see you, Ben. Let's start with basically this fundraise, the QIP of 1,500 crores. How do you plan on utilizing it?
Hi, good morning. We're very happy with the outcome of our QIP. We are looking to utilize the funds basically as growth capital. We are seeing that across the sector, all of the different domains, residential, office, retail, and hospitality that we're in are doing well. And we're looking to basically capitalize on that trend. Specifically, we're looking to use the growth capital for the residential sector.
Any part of this will be used to reduce your debt? Are you looking at debt reduction?
On the residential sector, we've been running it debt-free for a few years now. We do employ debt in the company, mostly for CapEx to grow our lease rental portfolio. And once it's leased out, we used securitized, we securitize the lease rentals, and we basically have a very low cost of debt across the board. So predominantly it is for growth, but there will be some recycling as well.
Pavitra, hi, good morning. Prashant here. The underlying business, how is it panning out in Q2, Pavitra? I think in Q1 we did see a bit of a fall in terms of pre-sales and overall volumes. Have you seen recovery in Q2? And what is the growth guidance for the full year 25?
So in Q1, it wasn't just at Brigade, but multiple other of our peers as well did show slightly lower numbers. Those of us, especially with a lot of projects in Karnataka, face some slowness in approvals. Not just Karnataka, Tamil Nadu, Telangana, a lot of the South Indian states, we face some slowness due to elections and therefore some impact on approvals. But a lot of that has been getting resolved during Q2. In this kind of market, a lot of the sales numbers are driven by launches, especially. So that's kind of why the Q1 numbers looked a little lower. But I would also say that it's reflective of what is able to come in for launch. So what all the indications that we have on ground is still that demand is very good. We're still getting a lot of walk-ins, responses to our digital marketing campaigns, and so on. So we're quite confident that Q2 will be a lot better than Q1, and going forward as well for the rest of the year, for the financial year. It is to be supported by launches. We have about 12 million square feet coming up in launches for the next 4 quarters. And a lot of that should translate into sales for the numbers this year. So should be looking at a good, good FY25 as well.
You want to quantify that, Pavitra? What would good mean? The start has been a little bit softish for reasons you mentioned. But for the year, since you're seeing a recovery in Q2, you have so many launches as well, what should we end FY25 at?
So Brigade usually doesn't give guidance. We try to aim for a 15 to 20% year-over-year growth, and we're striving hard for that. As long as the launches are coming in, we're very confident of the sales.
So 12 million of launches over the next 4 quarters. How much of that will come in Q2?
So we are working on maybe another 1.5 to 2 million square feet to be launched in Q2.
Okay, all right. Let's focus a little bit on pricing then. You had that new Chennai project that you launched as well. So as a geography, how has Chennai been in comparison to, say, your core market or Bengaluru? And could you give us pricing trends in both these 2 markets as well?
Sure. So just in terms of overall market size, Bangalore absorbs about 50 million square feet of residential space annually. That number is still at around the 2013, 2014 level. So as a market, we're sort of just back up to where we were 10 years ago. Chennai is a little smaller than that. It's about 55 to 60% of the size of Bangalore. While in Bangalore, we enjoy a leadership position. In Chennai, that's one market that we have done a lot of groundwork. There has been substantial business development in Chennai for Brigade as well. And over the coming years, we'll be seeing a lot more residential projects coming up in Chennai. As a market, it was historically priced better than Bangalore and say higher than Bangalore. But in the last couple of years, we've seen dramatic price increase in Bangalore. So I would say it's sort of neck and neck right now. It really depends on the different sub-markets where we're launching projects. Our recent project that you were mentioning, Brigade Icon on Mount Road, that's That's done extremely well. We launched that in Q1. The RERA approvals came in early in Q2, and that has done extremely well. The average pricing there is about 27,000 rupees plus per square foot. So a 7 to 8 crore ticket size. So it's a very different project for Chennai and a very different project for Brigade as well. So we're excited for the prospect of residential segment in Chennai.
Just to push that point on pricing, I was talking to a banker. I mean, and he was saying that, and this is not about Bangalore, or he was saying that across larger cities, right, price-led gain for land is a different issue, but for flats, that maybe we're kind of we past the peak. So that demand, I mean, actually, if people want to buy a home to live in, that's of course that demand, as you said, is very solid, but in a way, investment-led demand with an eye on potential gains that prices will go up, that's kind of maxed out. That was his opinion. I don't know if you have a view, Pavitra. Not just, I mean, I'm not talking about Brigade, but generally. Yeah.
Yeah. So in many of the key markets, top markets in the country, we have seen your double-digit price growth, quite eye-watering, actually. I would say most of that is probably behind us. It would not be right for us to keep expecting, substantial price increases where people are, in the past couple of years, it's been 20-30% increases. I don't think that is sustainable. And, we are still happy. I would say people in general should be happy with, a 5 to 6% growth as well. This is a real estate sector that we're talking about. While many people look at it as an investment, it is still predominantly in the residential side. It is predominantly where people expect to take possession, utilize that space, live there, etc. So in our own portfolio, we have a very high percentage of end users, and therefore we see that demand to be very stable. So I would say there is still some investor appetite for real estate because people should be looking, in a medium to long-term time frame if they're looking at the sector. There is some speculative demand, which I do hope remains minimal, because that would ensure that the cycle is a little more stable and ends up being longer than it can otherwise be.
Very quickly, Pavitra, on the hospitality portfolio, the occupancy went up, but the ARR was more or less flattish in the first quarter. You had guided for a 10% increase for the year. Do you think that's still doable? Is that still on the cards?
Yes, I think so. There's a lot of seasonality in hospitality. Q1 can generally be a little slower, but coming up with all of the festivals and conference season and so on, I think we should still be on track for that.
Okay, thank you very much, Pavitra, for joining in, and wish you all the very best. Now, moving on, the Ministry of New and Renewable Energy recently notified